Struggling with prop firms? Let's go.
Hey guys, welcome to my channel. Today we're going to be speaking about a very important thing, which is basically your win rate does not matter. Risk reward does play a huge part. We've got obviously other factors that come into play, your edge, psychology, these risk management, things like this. But I'm going to be going over a few of these examples. We're going to be using break and retest strategy, gold as the example. Now, even if I show you, let me just go over to my Discord community, right? By the way, link will be in the video description. More than 1270 members. This is just one of my certificates with FTMO that I just posted. Obviously, the list goes on for students passing their challenges as well. If I actually show you, by the way, check testimonials, everything. Okay, so here, this is one of the videos I recently posted. I mean, when was this? It was about 4 days ago. I passed phase 1, risking only 0.5%, and I passed phase 1 in one trade. So 1 to 15 was targeted, and I was able to achieve that. Now again, does that mean my my win rate is super low? No, it's just that we have supercharged the break and retest. It's actually turned to an absolute monster. By the way, if anyone is interested learning my 700k, that made me 700k funded, the exact method, I've made it super affordable now for everyone. Doesn't matter which part of the world you're from. I've only made it less than 3 digits, only £99, so you can get your copy, your hands on this. All you have to do is just come in the Discord, or actually in the video description, link will be in the video description. Just click on the link and you can get yours. Or if you're looking for one-to-one mentorship from myself, just come and direct me, DM me, direct message me. So okay, so without wasting any time, we've got these zones marked here. Now this is basically an uptrend. I want to speak about this as well. This is basically an uptrend, and the confusion that people have, right, when it's an uptrend, and I've had a few messages when it comes to things like this, is where do you have to basically draw your zones in an uptrend? Because that's a big confusion as well. So if I went to the bigger, let's go to a little bit of a bigger time frame. Wherever you can either use your line chart, but wherever you see the major rejections, that's the best way it's going to be, right? Now obviously this is not the exact break and retest that I trade myself, or I show to the students. Then again mentioned, that only in the course and in the one-to-one mentorship I teach, but this over here is obviously, this break and retest is still a solid method, but still I personally don't like it, just due to the win rate. And I did other few, obviously the way I refine my entries and refine my zones, I 100% by far, I'm more than happy with my method. So with this one here, okay, we've got these, we've got these multiple rejections here. It goes on and on. Now I can see, it's like, okay, let's start with example 1. So that's the, they're not used to get confused. Okay, let's cut this one off here. Okay, so what do we see here? So we want to go, obviously we've drawn the bigger time frames for the zone, so you want to pop down to a small time frame. Now we've got our entries, right? What do we see here? Large volume, right? You can see large amount of volume coming in, because first you always want to see a break. Let's color this black, maybe. No, so I want to highlight this in a better color. Okay, let's color it purple. So even though we're in an uptrend, we're doing a little bit of a counter trend trading, right? Why? Because after the zones have been marked, this, for temporarily, this small structure here has turned bearish. But still, just because there's been a little bit of a shift. Why? Because of this break here, right? And not only that, if you can look at this, you can see this left shoulder, that's the head. This is the right shoulder, and this completes the move to the downside, right? So look at that. Normally this head and shoulder pattern indicates a bearish pattern, a bearish signal. And in this case, so we've got the head and shoulder pattern, we've got a bearish. If you look at this candle here compared to the previous candles, a lot of volume in here, not the best, obviously there's a huge wick at the bottom as well. So but still there is significant bearish volume. We get the break here, and now if I go to a small time frame, is the break enough though? No, right? This is why when you see, even if I show you here, even if I show my live trades that I post from my broker, which you cannot manipulate because these pips, you can't fake these here. Look at this, I'm pretty much this was a 1 to 5 or the break even. This was 1 to 9 on NASDAQ, 1 to 11 on UJ. NASDAQ and UJ, this is a separate 1 to 9. Oh no, sorry, apologies, my bad. let me see the dates here. 1 to 11. No, this is a different one. Just because of the time difference I could tell. And this is, yeah, this UJ and NASDAQ with these two are different. This is a 1 to 9, 1 to 8. The one before that was a 1 to 11. These are just 1 to 5s that, you know, eventually turn to 1 to 9s over here. It goes on and on. And that's just the way I've supercharged the break and retest and hitting for this huge, you know, 1 to 7s, 1 to 9s, 1 to 10s. Why? Just because of my biggest strength, my biggest edge, I personally would say, is my ability to draw strong support resistance level zones. Now here we get a bearish volume break, but now we've got to identify our, you know, price has done the breakout. Now we've got to see, has it established, you know, has it respected this once previous support now as a new resistance. Let's go to a smaller time frame. Let's look for the clues now. So we've got one clue here, multiple wick rejections. Now if I move this out of the way, we get multiple wick rejections. Ignore this for now, right? So let me just delete this out of the way. So now he's going to focus on this area here. Let me just delete the head and shoulder as well. So look at this, another huge bearish volume. Now what do you see here this time though? So first we had the head and shoulder pattern form. Where's the tool I'm looking for? Now we are getting a double top. As soon as price starts showing, and now you can look at that. How clean is that? You can enter from here, right? Because we already got a bearish break, we've got a little bit of a mini bearish trend, we've got a double top pattern, and you can just enter from here. Now, super safe would be above, having you stop above this zone, but let's just go into more in depth, right? And I know you guys like the value. By the way, if you're finding value, you know, just hit that like and subscribe if you haven't already. Okay. So now look at this. You want to see another thing? Left shoulder, the head, right shoulder, and that's a push to the downside as well. Now I'm not saying use every time you see a potential head and shoulder pattern, you know, you go with that, but you can definitely use it as a confluence. Now, what can we use for a entry, right? So we can say we got just the way you have trends, mini trends within trends, you have zones within zones. So here now we've got, here is the peak of this mountain, right? This is the major zone, but as I can see, I mean, you can even see this one connects from here. Look at that, support, resistance. You can see that this resistance here has never been broken, perfectly respected, right? So let's see if we can even take this. Let's go in the 1 minute. Let's see what the 1 minute is showing us. Well, first of all, this is, if you're taking entries on the 1 minute, that's your bearish engulfing there. Bearish, you can take your entry after this candle, have, you know, your zone above, your stop loss above this zone, or your stop loss above this zone here, and it was to give you a nice risk reward. Now, I mean, all these candles here are all bearish signals. All of these evening stars, dark cloud covers forming. There's another huge bearish engulfing here. All these signals here, and then you could just take your entry from there, and it would give you a nice risk to reward of, what are we looking at here? A 1 to 7 almost, is it? Almost 1 to 7, and then that's a nice catch. Now obviously price comes to this support level. I don't trade from support unless it's a breakout. I don't trade from resistance unless it's a breakout. Price keeps going. Let's bring it to a bigger time frame so we can move faster. Let's go on example 2. Now I won't have time to go through all these. I'm just trying to go through. Well, look at this one here, right? This one actually was supposed to change the color of this, so it highlighted it more. But this is basically one of those trades. Let's call it this purple. I like to call my void trades purple. Why is this a void trade? Right, change the color of this. We got a break. Price never came to this support level. So some people would normally just out of FOMO just enter the trade. You know, the absolute best thing you can do, well, the absolute best thing you can do is not to take the trade. But if you were sometimes, you know, trigger fingered, make your stop loss. If you're going to take an early entry, add those extra pips to your stop loss as well. But my advice would be not to take the trade at all. That would be my advice. You know, price keeps going. So what we'll do is remove example 2, we'll work on example 3, and also, okay, another thing as well, why basically, you know, is it better to just totally miss these trades, because trust me, it's very bad for your psychology. If you took the trade and you lost, because deep down you know you're not supposed to take the trade. Deep down you would know. And then the worst thing is losing a trade that deep down you know that you wasn't even supposed to take. The impact it has on your psychology, you don't want to know. Okay, so huge volume candle. We got strong bullish momentum trend. Huge breakout candle. Well, this is the breakout candle, but this is just showing buyers in supreme control. Now we get multiple wick rejections. Let's go to a small time frame. Where would we enter from? Right, that is the main question. Where would we enter from? Okay, when you get multiple wick rejection like this, right, I mean, this is a super weak bearish candle. You don't want to enter like this unless you aim for a nice 1 to 3, keeping your risk reward super small. I'm not a big fan of that. It doesn't help my psychology. But if I was seeing multiple wick rejections here, you could just enter off that. You could just enter off that. So I mean, let's cut this down. Let's go to a smaller time frame. Okay, let's see any more clues. Right, you see this support here fails to break. Look at that. How perfectly is this getting respected? Look at this top of this, respect. I mean, here, perfect rejections. Now if I want to make this, now there's another one over here actually as well, right? Now this is obviously super tight, but it gave me access to crazy risk reward of 1 to 26. The extreme. This one would be more recommended, and below this zone is super safe, but below this one, let's see what the risk reward. 1 to 15. Oh, so below this one, 1 to 10. So you can still see you getting those nice big risk rewards. Now if you have a 50% win rate with a 1 to 10 risk reward, you don't have to be Einstein or related to him to know that you got a super insane profitable system, right? And that's what the thing about trading, what I like to do as well, I just like to gamify it. The more I gamify it, the easier it becomes for my psychology. Now let's go through one last one. Keep this going. Okay, got our zone here. Let me delete this one because I'm just gonna do one more. Actually, delete this one. Okay, so we got resistance here. We've got price breaking above. Let's go to a small time frame. Look at that, super strong bullish breakout. Now price is coming back down. Now we want to see some kind of a price respecting and accepting this area as support. Now this is a huge bullish engulfing pattern, right? That's your signal. You can just put your, now obviously you don't want to enter from here, right? Because your stop loss is going to be just too big. That would be a 1 to 3. 1 to 3s are not technically bad, but like I said, not fun. Price tends to like to retrace a little bit of that previous candle. Then you can have it below here, halfway of the zone. Not a fan, but this one is to give you a nice 1 to 4. But let's see if we was to chop this, how can we dissect this even more? Okay, look at this, right? Support established here. Price never breaks this support. So how would I have this? Rather than now below this zone, you can have it below this zone, right? Now this is obviously a major zone. So if you lose this trade, don't be kicking yourself why you lost. Now because I could pretty much 1 to 12 risk reward. But if just one moment, let's go to let's see what was the 5 minute showing again. Let's see what the 5 minute was showing again. Yeah, 5 minutes showing the bullish engulfing. Let's see what the 1 minute was showing. Yeah, it's gonna pretty much show the same. So you can just tap into the price is respecting. And let's see, and there's one more pattern here. Look at this bullish engulfing, long wick rejection, bullish candle, super strong, no wick at the top. That is a 100% candle strength. Even if I turn on the candle strength indicator, I'm sure it will show pretty much 100% candle strength. I could be wrong. Yes sir. Look at the strength of this candle, 100%. As you can see here, that's how you know. That's how you know. Well, I hope you found value from this video. Take care. Like, comment, subscribe. Yeah, I'm out.